Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash, where we take a look at some of the things that are affecting the US dollar, the US economy, and in all sincerity, each and every one of us in different ways, and to some extent, I guess, in some extent the same way, unfortunately. I have with me my co-host, Chris Agelastos here. Chris, good morning. How are you?
Good morning. Doing well, doing well. Getting ready
The
for Valentine's Day coming up here.
Valentine's Day right around the corner. It's hard
Don't
to
forget,
believe.
fellas.
Yeah. Well, I've got Valentine's Day on the 14th, as everyone else does, and then my wedding anniversary on the 15th. So at least
Oh, that's right.
I kind of minimized my chance of forgetting, because to forget both would be a lot.
Right. Yeah, but it doubles the payout. You have to get twice as many gifts.
No. You just got to be smart about it, Chris. That's actually
That's
gifts.
the
I love
key.
giving gifts. I love giving gifts. It's just a matter of, finding the right gift.
That's the
Because
hard part. Yeah.
I have a very practical wife who does appreciate nice things, but actually appreciates things as well that, are thoughtful, useful, and not wasteful. So
Right.
a lot of pressure there
It's
sometimes.
a
But
tough balance.
anyway, maybe we can do a podcast on that at some point.
Perhaps.
There are probably a large portion of the male population struggles with the same thing. But
I'm
on
sure.
that note too, it is always weird to me. Why is all the pressure on? It's Valentine's Day. It's supposed to be a mutual thing. Now, the anniversary, kind of the same thing, but it seems
Yeah.
like all the pressure's on the guys more so than it is the gals. Which,
Maybe we're just putting it on ourselves. I don't know, but you're right. It does seem like the guys. It's up to the guys not to screw up.
yeah. Well, most of the problems we do that we do put on ourselves. So
Accurate.
you're probably on to something there. All right. Well, off of Valentine's Day, let's talk about the Chinese.
Hmm.
Take a look here at our first article. This coming from the Economic Collapse blog. I know that sounds very encouraging, but it's really not. The Chinese take a hammer to the US dollar. That's also not encouraging. By instructing their banks to dial back their holdings of US Treasuries. Now, when I saw this, it's actually like, I was kind of like, well, they've been doing this for a long time already.
Hmm.
So when I saw this, I was like, well, that's bad news for the US because it's a very accurate description. It's taking a hammer to the US dollar. But more so than that, as you start reading through it and I look at this, the bottom line to the whole thing is that it just goes to show that the Chinese are taking it up yet another notch because now they're instructing their banks to do this, which again has already been kind of naturally taking place, but now it's becoming a little more, we'll call it formalized, if you will, maybe a little more systematic. And, this all happening at a time where, and we talked about, I think it was last week's podcast, where you have 9 out of 10 American households agreeing that the problem with inflation in our country is real. Like we have basically literally almost runaway inflation. And so what that speaks to is the weakening of the US dollar. And what this article speaks to is yet again the fact that the dollar is going to be facing even more troubles ahead as again this becomes a little bit more formalized.
Yeah. Yeah. And they're definitely, I mean, you can't blame them. And you're right, this has been a long-term trend. I mean, their treasury holdings have been declining for years. It states in here that at the peak, they had about 1.3 trillion in treasuries around the 2010s. And some reports put them down to about 300 billion now. Now, I don't know, how you can measure that to the dollar, but if that's anywhere near accurate as to how far the decline has gone, I mean, that's obviously bad. And it doesn't help that this year the U.S. dollar index is down about 10%. And so if you're holding a large portion of your
I didn't
reserve
realize
currency,
10% this year already.
that's what I found.
Good Lord.
10%. Now I don't know if that's over the last 12 months or if they mean in the last couple of months. Probably over the last 12 months, over the last year. But
It's
still,
bad
right?
nonetheless, but yeah, this
10%.
year,
Yeah.
right.
So you can't blame them for doing this shift, and like you said, again, they've been doing it for a while, but the writing's on the wall, and I think it's not going to slow down. It's going to continue. So we shouldn't be shocked by it. But yeah, it's not good news for the U.S. dollar.
Or for any of us, you, yourself, myself, and anyone listening right now.
Yeah.
Well, that leads into the next article, where not only do we talk, it sounds similar to those tuned in. You'll see the articles in our show description. China demands banks to curb U.S. Treasuries exposure in the new BRICS shift. And the reason I incorporated this one into our show here today, Chris, is because the earlier one was pretty specific towards China, but this is actually incorporating the involvement with BRICS. And it starts off by talking about how India recently shifted its BRICS strategy when they signed a new deal with the U.S.
Hmm.
Well, that is true, but what they did, it wasn't like they said we're out of BRICS per se. They just came to an agreement to, I believe it was to no longer deal in Russian rubles, if I'm not mistaken. And then they got a break on their tariffs. But
Hmm.
the point of it is, they go on to say here how China is doing the opposite, as they have demanded that state-run banks cut down on their treasury holdings because of exposure. That's why they're doing it.
Yeah.
Ladies and gentlemen, they're not doing this because they're mad at the U.S. per se. They are doing it because they don't believe that the long-term exposure of that is good. And it goes because, as it says here, the regulators have cited concerns of concentration risks and market volatility as the main reasons for the curve. All very true. And
Yeah.
the bottom line is that this speaks to kind of what we've been talking about, how you look at these individual situations or instances in the global markets and the global economy and what effect or impact they might have on markets. But then you like what central banks might be doing or what China is doing or Russia or India, as we've just talked about. But then you also incorporate that you've always got BRICS doing their own thing too, which is in alignment with the same thing that like China is doing right now as well. And it's not, like I said, it's not just like India has abandoned the whole notion of BRICS. They've just
Right.
perhaps said, okay, we're gonna kind of hit the brakes just a tiny bit in this area, and still continue on with everything else they're doing it. So I don't really see that as being so much the positive that they're kind of making it out to be here.
No, and keep in mind too, as far as BRICS goes, Russia and China are the most influential members of that organization, and so other member nations are going to kind of fall in line more so with what Russia and China is doing than some of the maybe smaller players. Not that India is a small player, but when you compare them to Russia and China, they don't have as much influence. So, and again, they come out and say this isn't, like you said, it's not because we don't like the U.S. This isn't some sort of political play, which maybe is true, but I think you got to pay attention to what they're doing, regardless, whether they say it's for political reasons or not, or because of sanctions, or because they're trying to flex a little bit, maybe on trade deals and gain some leverage. At the end of the day, what they're doing is telling us that they want less to do with our dollar. And I think what a lot of people don't realize is that our dollar is used in circulation far more outside of the United States than it is in the United States. And
Right.
that's something very unique to the US dollar because we have been a world reserve currency for so long.
Right.
And so, these shifts and changes do have an effect on us. And I know, typically, there are some fear mongers out there that will say, this is a problem that we're going to just wake up, one day next week and maybe our dollar is going to be worthless. I don't think that's accurate either, but we're on a steady, consistent decline in the value of our dollar. And that is something that you do need to address sooner rather than later, or it will catch up with you.
Yeah, and that's the we say million but $1 trillion question at this point is this decline and managing this decline. What does that even look like? Because it really is not. I'm trying to find where inflation, what the dollar's lost this year. But this is something that seems to be in somewhat of a free fall. And the problem is, I mean, yes, President Trump did get with India and, work out this one arrangement, but it's again, that's just one small vein in the whole body,
Right.
so to speak. And that's where I think, it just again speaks to the whole vulnerability of the US dollar and what's happening with it in the global marketplace. So hence why we have a secret war on cash, ladies and gentlemen. And if you would like a free copy of that report, and or if even if you've had one, we updated it. I think it was several months ago now, but if you'd like to get a copy of that, please feel free and contact our office, or you can do that by telephone or text at 1-800-289-2646, or you can visit us online and request it as well at www.swissamerica.com. Thanks for tuning in, and if you're not subscribed, please do so, as we'd love to talk to you more in the future. Have a great day and a great rest of your week. Talk to you soon.
Yep. Take care.